Good morning, everyone. I'm Frankie from Penfold. This morning, we're going to talk about the national insurance increase. We're going to start in 2 minutes just to let some people filter in. But I hope everyone's having a good morning, has had a good week, and looking forward to hearing more about national insurance and salary sacrifice, even though it can be a dry topic. So I'll just hold off for 1 more minute and then we'll get started. Great. Well, it's 11:02. We've got quite a few people here. First of all, I just want to say thank you for joining me. I know national insurance isn't the most interesting or exciting topic, but it's particularly timely with what's going to be changing in just a few weeks' time. And that's what this webinar is all about. So just really quickly, I want to introduce myself. So just really quickly, I'm Frankie. I work in marketing at Penfold. I've been at Penfold for about 5 years, so I know all the ins and outs of pensions. I know quite a bit about national insurance and salary sacrifice as well. You can see me on the right-hand side of this photo here. We go out to conferences and meet lots of employers, lots of businesses to talk to them about pensions. So hopefully you'll find this session useful and I can be enlightening. Um, in terms of what we're going to cover today, so we're going to cover the basics of national insurance, what has been the case up until this point, what's going to be changing in the new tax year on April the 6th, salary sacrifice and how that can help you and your business save money. We're just going to cover a couple of myths about salary sacrifice as well, and then how Penfold can help with salary sacrifice. And I do want to make sure everyone's got plenty of time to ask questions. I know if this webinar is booked in for about an hour, it's probably not going to take any longer than half an hour, so that there'll be plenty of time for questions. So please pop them in the chat. I'll answer them at the end. So, employer national insurance, the basics. So I think all of us probably know about national insurance from our own personal pay slips. It's one of those lines that gets taken off of your pay every month. But employer national insurance might not be quite as well known because we don't necessarily think about it month to month. So just really quickly, yes, it's a tax and it's paid on employees' earnings. And the sort of overall goal of national insurance in general, when it was first set up 50, 60 years ago, that it was to help pay for things like the NHS, state pensions, and social security. Now, as an employer, you must pay Class 1 national insurance contributions on your employees' wages above a certain threshold. And we'll get into it, but thresholds are one of the things that are going to be changing from April the 6th. But that's the very basic definition. Now, in terms of the numbers and how it might work, so currently you as an employer will be paying 13.8% on any earnings over £9,100 a year. And that's applicable to salaries and wages, bonuses, and certain benefits in kinds. And I think the important thing to note here is this cost is on top of the employee's salary. So the more you pay your staff, the more national insurance you owe. And this is something that's particularly interesting. Inflation is always ongoing. We've had lots of inflation over the last few years, and the thresholds up to this point has stayed the same. So actually, you will have been paying more anyway if you've been offering pay rises in line with inflation over the last few years. Now, why is national insurance a big deal for businesses, particularly employer contributions? It's obviously a huge business cost. It's normally the largest payroll expense after salary. So it's a huge expense and it's a key area that you might want to look at in terms of being able to reduce if possible. As I've already mentioned, national insurance increases with pay rises and bonuses. So the more money that's going out in those costs, the more employer national insurance you're likely to have to pay. And yes, that is absolutely in line with business cash flow as well. So the more staff you have, the bigger the bill. So I think these are the fundamentals that you may hopefully know about already. But the stuff that's really interesting and probably the most timely is what's happening in a few weeks' time, in April the 6th. So last autumn, October, the very end of October, right after Halloween, Rachel Reeves announced the autumn budget, autumn statement. And there were two key changes that she announced in terms of national insurance for employers. Now, I'll just really quickly say this doesn't actually impact employees at all. It's all on the employer. So the current rate, as we've already mentioned, of national insurance for employees is 13.8%. That's going up to 15%. That's the number one measure that's been announced. And the second one, which might sneak under the radar, but if anything is more important, is that the threshold of earnings where national insurance is paid is being decreased from £9,100 per year to £5,000 per year. So effectively, any salary, any monies being paid over £5,000 will be subject to employee national insurance. So that's a pretty significant change over what we've had up until this point. So how does this impact businesses? There's a lot of sort of percentages and just sort of one-off numbers here. Per employee, these are factual figures that we've calculated. For a minimum wage earner, for every single earner, that will be £770 extra in employer contributions. And a median wage earner, £33,000 per year, that's a £900 increase in employer national insurance contributions. And that's for just a single worker. And just so you can see this, that was obviously some numbers that we've calculated at Penfold ourselves. This is some data from the Institute of Fiscal Studies, which is the exact same data. So you can see called out here, we've got the same figures of £770 increase for minimum wage and £900 for median wage. But you can see how that scales up when gross earnings increase as well. So the impact on businesses is pretty significant, as you can tell. So fundamentally, what does that mean for businesses? As we've already discussed, national insurance contributions will increase. Now, what that might sort of ladder down to are thinking about business budgets, financial plans, how are these additional costs going to be accommodated? And then looking ahead, how can you sort of try and mitigate some of these measures? And we're going to talk about salary sacrifice in a bit more detail. But these are things that are going to start spilling out over the next few months. And that really comes on to the next point, which I wanted to cover, because this is in the news quite a lot at the moment. So I've just pulled out some stories across some of the big publications around the UK, but we're already seeing lots of news stories when you get past Ukraine, when you get past Trump, that there's talk about pain in terms of jobs, pay rises. There's talk in the House of Lords around this national insurance increase potentially being the straw that breaks the camel's back for a lot of UK businesses as costs have been increasing over the last few years. This is just another significant burden being added on to businesses. And just something this is very relevant to pensions, but quite sort of shocking for me, as someone that works for a pension company. There's actually a council in London and Kensington and Chelsea, if you don't know, you would think is quite a well-off council. They're actually going to stop paying into their staff pensions, at least temporarily. I don't know all the details about that because that does seem very severe, and I don't know how that could potentially be compliant, but these are the things that a lot of businesses and public bodies are thinking about with the changes that are happening. Now, salary sacrifice. Salary sacrifice as a name is probably not the best because it sounds like a negative. We're going to have to ask people to give up their salary, or we're going to have to reduce salary. A lot of other companies, or another word that's used to describe it, is salary exchange, which is probably a better way of describing it. But if you go to the government's website, they will describe it as salary sacrifice. So what I'd like to do now is just take you through how salary sacrifice can have a really positive impact on mitigating some of these costs. So first of all, sorry for all the words on this slide. I promise this will probably be the most wordy slide we've got today, but I wanted to make sure we have the exact terminology correct for you. So it's a tax efficient way for employers and employees to save money because it reduces national insurance. How does it work? It works by employees agreeing to exchange part of their salary in exchange for other non-cash benefits. And a big way of doing this is through pension contributions. There are other methods. A big one is company car schemes, and there are a few others as well. But in terms of big costs, it tends to be pension contributions or company car schemes. And how it actually fundamentally works. And I'm going to get onto a slide which is a bit more graphical, which might explain it a bit more in a straightforward way. So instead of employees paying into their pension after tax, their pension contributions instead come from their gross salary before tax, which basically reduces what their gross salary is, and therefore employee national insurance gets reduced, as well as income tax potentially if it moves them down a tax band. And it also obviously decreases employer national insurance contributions, which is what we're mainly here to talk about today. Now, like I said, that's a lot of words. This is a little graphic that Penfold we've created that we've got up on our website, which is a little bit easier to understand, I think. So at the top here, we've got a bar which shows how it works without salary sacrifice. And I think the blue bar, both the dark blue and the light blue here, is basically the full cost impact for you as an employer in terms of paying salary and paying into a pension. And what you can see here is without salary sacrifice, national insurance is calculated on both the salary and any pension contribution from the employee from their own salary. And basically what salary sacrifice allows you to do once it's agreed with your employees is you're going to pay as the employer what would previously have been not just your own employer contribution, but the personal contribution from the employee, and basically the national insurance then just gets paid on the salary that is directly paid into people's bank accounts at the end of every month. That's the very simple way of explaining it. There are a few more nuances to that, but that's really the fundamental thing that you need to know. We're reducing gross salary, but actually for employees, their total compensation stays the same. This looks like I've just duplicated the slide, so I'm going to skip past this one. So how does salary sacrifice save employers money? So I've got two examples here. I've got the example for a single employee on the left, and then I've just scaled this up to a 50-employee business on the right-hand side. So if we just stay to the left-hand side, what I should first note are these little terms at the bottom here. This is what's going to be the case from April the 6th, 2025. And this is if this employee is earning a £50,000 salary. So what you can see is before national insurance, the full gross salary is being paid to the employee. So £50,000 is being paid, and they're paying £1,500 into their pension pot. Now, after salary sacrifice is implemented, the employee is agreeing to reduce their gross salary to £47,500, and instead, that sort of increase, that money that's saved is going directly from you, the employer, into the employee's pension. So really all we're doing here is exchanging £2,500 from a gross salary into a pension contribution. So you can see after all the calculations are made based on that gross salary of £47,500, we're actually reducing the employer cost by £375. And that is because the employer NI contribution is being decreased by £375 here. Now, that seems a relatively small amount for a single employee, but this number scales up linearly with the number of employees you have. So very simply, all of the figures on the right-hand side here are multiplied by 50, which for a small to medium business is a relatively sort of normal size of headcounts. And you can see for a business there, they're going to be saving almost £19,000 a year by just switching to a salary sacrifice pension. And now obviously this can be different, there's differences depending on if average salaries are higher, then the saving is higher. And likewise, if the average salaries are lower, then the average saving is lower. I haven't done any additional calculations here, but the interesting thing with the threshold being decreased from 9,100 to £5,000 is that actually there's a bigger impact on lower earners than many people might realize up to this point, because a lot of lower earners are only going to be paying, at the moment, the portion over £9,100. So if you're a part-time earner, worker, only earning potentially sort of £15,000, you're currently only paying national insurance on the difference between 15,000 and 9,100. Whereas going forwards, you'll be paying national insurance on the difference between 15,000 and 5,000. So there's actually a disproportionate impact on lower earners, which is something that hasn't really been spoken about. And I don't have any further information, but more than happy to talk about that more if you have any questions or follow up with further information. So those are all the big numbers in terms of calculations. So what I'm really keen to also mention is salary sacrifice can benefit employees as well. So it's both good for employers and employees. So it also decreases national insurance for employees. And I've already mentioned it can move people down tax brackets potentially as well, meaning employees can actually keep more of their earnings overall. Something I should mention, Penfold does help lots of employers move to salary sacrifice. And many employers actually choose to pass on some or all of the savings made into employee pension contributions. And as I've already mentioned a couple of times, overall remuneration for employees stays exactly the same. It's just structured differently how they're paid, and that the pension is paid directly by you as the employer. So we're seeing more and more businesses using salary sacrifice, especially over the last couple of months. Ourselves at Penfold are getting a lot of interest from employers interested in switching to salary sacrifice. And again, this is really just a summary of things that I've already covered, but very simply, it reduces payroll costs, and we've covered that in a lot of detail already. Something that I haven't spoken about yet is it's actually can be seen as an employee benefit. So either through increasing pension contributions, or because employees understand that they might actually be paying less tax. So that can be beneficial from a retention point of view, but it can also be beneficial from a talent attraction point of view as well. And we know that the job market is very competitive. So any sort of way that you can improve your sort of employer brand is always beneficial. And something else I should mention, obviously there's been a few complexities that we've covered here, but it really doesn't have to be complex to implement salary sacrifice. A lot of pension providers, and obviously I'm going to call out Penfold here, will manage a lot of the administration for you, just so that you can basically focus on the day-to-day running of your business and your job role, rather than have to worry about all the sort of admin of switching pension providers. So I've just got one slide about myths, because there are a few myths about salary sacrifice, but it's worth covering. So we've already covered people quite often think it's complicated to set up, and actually that might come out of the place of you might have spoken to a pension provider you're with already, that have said, oh, it's going to be a hassle, or it's something that we can look at in the next quarter or the next year. Actually, if you have a sort of engaged pension provider that's working with you closely, they should make it as simple as possible. And that's something that Penfold really focus on, making the switch painless and seamless. Something else we've already covered, employees might think that their pay is going to be lower than it was previously. We've already covered the net pays, or their actual total remuneration might even be higher with salary sacrifice. That's again something, as you work with your pension provider, you can tailor communications to your employees to make sure they understand what's actually happening. Penfold, we've done this for hundreds of businesses across the UK. So we've got lots of materials and we can help you communicate with your employees about how this works. And something we haven't really covered up to this point is how it could impact other what might seem like unrelated benefits. So things like childcare costs or things like mortgage payments. So, for example, mortgage payments, your mortgage eligibility is normally based on gross salary, and salary sacrifice actually reduces gross salary. But one of the things that your provider and Penfold can certainly help out with is providing a letter that can be sent to the mortgage provider to explain that your employee is in a salary sacrifice scheme. And actually, normally mortgage providers are understanding that how salary sacrifice works and that they know all about it. So yes, absolutely, there are ways to mitigate any impact on other benefits. I've touched on really briefly up to this point how Penfold can help. But I just want to go into a couple of slides just to talk about how we make the whole process really simple. So just really quickly, and I'm not here to really give you a sales pitch, but I just want to quickly talk about Penfold and who we are if you didn't know about Penfold already. We were set up in 2018, so we've been going for about 7 years now as a challenger pension company. So we've got over 100,000 employees saving into their pension up to this point. We're actually rated 4.6 on Trustpilot, which among auto-enrollment pension providers or any actual pension provider is among the top rated schemes. We have all the regulations and all the sort of protections that any pension provider would be required to have. And I think something that's important to note, Penfold actually don't invest employees' monies ourselves. We partner with BlackRock and HSBC, who are two of the biggest asset managers in the world, and they manage employees' pensions. Effectively, we're really focused on the employee experience of managing pensions through an app and the employer experience about all the setup and all the account management. And then we trust our partners to deal with investing money. And you can see we've worked with lots of companies, and we actually work with over 3,000 companies across the UK on their pension schemes. But enough about Penfold. What do we do to actually help? So first of all, I should mention it's completely free for an employer to work with Penfold, and that includes the whole setup of a salary sacrifice scheme. We say end to end. So what does that actually mean? So we can work with you to calculate your savings. We'll literally take your payroll file if you want to share that with us and calculate employee by employee how much you could save on by moving to salary sacrifice. As I've already mentioned, we can communicate all the changes to your team if you'd like us to, or we can provide you with materials where you can communicate to your team. And as I've mentioned, we've done this for hundreds of businesses around the UK, so we're experts at this. So we know all about the details, and if there's a question that hasn't been asked already, I'd be very surprised. And we can absolutely support with payroll changes as well. And we know all the ins and outs of working with whether it's payroll software or the sort of payroll systems, because again, we do this for lots of businesses. Aside from the direct salary sacrifice things, we also help with things like webinars, whether that's for you as an employer, or we can do webinars for employees to help them understand what's happening with their pension. And we also talk about all sorts of other things. So if you'd like to help your employees to feel more engaged with their pension, we can talk about what's happening with the end of the tax year, how they can make the most of their pension, all these types of things. Every employee with Penfold also gets an account manager that's always available for any queries. Obviously, there are things like email addresses and phone numbers you can contact them on, but we also integrate with your internal messaging platforms. So if you use something like Slack or Microsoft Teams, our account managers, if you'd like them to be, can be integrated within those, so employees can ask questions directly straight to their account manager. And we can also provide bespoke resources as well. So if there are specific things you're interested in, or if you'd like materials to be branded for yourself, for your business, we can absolutely provide those for you. Now, just the last couple of slides here, not to just take my word for it. This is a little photo shoot we actually did with one of our clients yesterday. So Duro actually set up a salary sacrifice pension scheme with Penfold a couple of years ago, and we presented them with a novelty check. It's a bit postcode lottery style, but they're saving, you can see here, just over £34,000 every year from their previous scheme by moving into a salary sacrifice pension scheme. And just one more really quickly. So I mentioned Duro, they actually moved to us a couple of years ago. Amplify Capital moved to us in the new year, so just a couple of months ago now. They were reviewing their workplace pension scheme because of the changes to employer national insurance. And they were actively doing some research. They came across Penfold, but they obviously spoke to us amongst some other providers, and they chose Penfold, and they're actually using the savings in national insurance to pass on to some of those savings to their employees as well in the form of increased contributions, but they've also saved some costs as well. So my closing thought on this is, and just in general, is salary sacrifice isn't just a smart financial move. It benefits both you as an employer and your employees. And its salary sacrifice has been around for a number of years, but with the upcoming changes, which are 3 weeks away, now is the perfect time to switch. So whether or not you're thinking about Penfolds or other providers, I'd really encourage you to look at it in a bit more detail, find out a bit more information, and start talking to some providers about how you can do this. So that's everything I wanted to cover today. Just really quickly here, if you'd like to find out a bit more about Penfold, if you scan the QR code here, you'll go to a form which you can submit some details, and we can sort of email back and forth, or we can set up a quick demo or a quick conversation. Feel free to visit our website at getpenfolds.com. It's got plenty of information about pensions in general, but also the national insurance changes and salary sacrifice. In fact, at the moment, you'll see there's a big pink banner at the top of the website. Click on that banner and you'll go to all of our information about national insurance and salary sacrifice. And if all of that is too much, please just email me. I'm happy to answer any questions over email. But otherwise, if there's any questions directly, I'm just going to keep an eye on the chat for a couple of minutes. But otherwise, it's been great to have everyone along. So thank you. Right, I can see we've got a couple of questions here. So Rena, absolutely, I can provide slides, and actually everyone here, I'll probably follow up with you and provide you with a PDF with these slides. So thank you. So we've got an anonymous question here. So if our business moves to salary sacrifice, how would this affect employees on minimum wage? So yes, salary sacrifice does reduce gross pay. It could potentially take lower earning employees below the thresholds. How is this situation typically handled? So yeah, this is where we get into, I've covered this at a sort of a moderate level of detail today, but there are lots of intricacies as well. And minimum wage earners are one of the intricacies. So first of all, what I would say is we're more than happy to take away any sort of very specifics to your business. But yes, certainly salary sacrifice actually can't apply if it takes employees below the minimum wage. So the very simple answer to this question is we can't, salary sacrifice can't be applied to employees where it's going to take them below minimum wage. But there are also nuances as well, and there are ways of working around. So what I would say to that is if you have a few more questions, or if you have a lot of employees where that would be applicable, then I'd definitely suggest you getting in contact with us and we can go into that in a bit more detail. Great. Well, I did say at the start that it would probably take about half an hour. Oh, we've got one more question come in. Please keep asking questions, by the way. I'm more than happy to answer. So Haley, thank you. So Haley asks, if we switch providers from our current provider to Penfold, can we automatically enroll employees on salary sacrifice? And can they opt out if they don't want to do it? These are fantastic questions. And this is again where I say there's a lot more, there are intricacies and we're more than happy to cover, but I'm happy to answer this. So what you can do, basically, if you're going to move into a salary sacrifice scheme, you are required to notify employees, but you can also either have an opt-in or an opt-out system. So, and that completely depends on your business and what you'd like to do. But if you'd like to move as many employees as possible, you can absolutely use opt-out. So that would, in that case, employees would have to say if they would like to opt out. Now, obviously, that would be communicated over email or over a document and say, if you'd like to opt out of this, please do so. And we can absolutely support with a form or any sort of materials that's required there. Um, Otherwise, if you want to be a bit more cautious, you can absolutely do an opt-in method, but most employers do the opt-out method. Um, and yes, absolutely, employees can opt out. And then, yes, we've got another question that's come in here, and absolutely no silly questions. So, Farrell, so how would one handle mid-year salary changes, typically increases, in terms of payroll and adjustments? So again, yes, this is something where there are lots of intricacies again, um, but this is where, as anyone that's ever had sort of a pay increase potentially through the year or changes to their salary, you'll know that sometimes you'll get a new tax code, things along these lines. All of these things are manageable. So you don't have to wait until whether it's your company financial year or the new tax year to implement salary sacrifice. It can be done anytime during the year. We will support you on any of the sort of payroll intricacies of how that might impact tax bands, any of the sort of tax implications, basically. And I would definitely suggest if you're interested, please do get in contact with us because what we'll do is we'll go through, as I mentioned previously in this, your very specific circumstances for you as an employer, and we'll work out the best method for you, whether it's to make the best saving or to make the process as seamless as possible. But the fundamental thing is you don't have to wait until tax year and you don't have to think about your company financial year. Great. Well, I'm still open to any questions. We've had a good few there, so I do thank you for that. I'm going to just stay open for another couple of minutes, let's say till 11:35. But again, I really appreciate everyone joining here today. And again, any questions, put them in the Q&A box. Great, thank you again, Haley. So Haley asks, how long does a switch typically take to implement? Um, so actually, normally we can be very fast in terms of a switch. We can actually do it normally in the span of a week or two. We've actually had some circumstances in the past where there's been an employee has come to us and they've had an issue with a previous pension provider and they've wanted something to be changed before their next payroll cycle. So that was those in those circumstances, literally a couple of weeks. Now, what we normally say to employers is we'll work to your timelines. And that is because for a lot of employers, they would like to do a lot more communication with their employees, or they'd really like to understand, um, the best time for themselves. But we can absolutely help you with a switch within a couple of weeks. But if your timelines look more like months or even longer, we're more than happy to go along with those timelines as well. But again, if it's something that you're looking to do quickly, we can probably do something within a matter of 2 weeks. Thank you again for the question. Right, it doesn't seem like we're going to have any more questions. I really, again, want to thank you for your time this morning. Obviously, we've spoken about this with a little bit of a Penfold point of view, but I really do encourage everyone that's joined here to think about what's going to be happening with national insurance, whether it's looking at other pension providers or other ways to mitigate the impacts. Um, I've been following this really closely over the last couple of months, and there's a lot going on in the world. We all know about this by checking the news, if you check the news daily. But I think this is going to have a significant impact on businesses, and I'm really keen that it has the minimum impact possible, which is why Penfold is really trying to fly the flag for salary sacrifice, whether it's with us or with another provider. So again, I thank you for everyone's time, and I hope everyone has a great rest of your day and a great weekend. So thank you.